Good day, YouTube. This is Jay Money with Falling Forward Financial. Come across this article. I thought it was kind of interesting. I was thinking about talking about one of them and just kind of put it off. But this is buying these two stocks is a good way to hedge against a market crash. And as you can see, this is just dated here today. Both companies have a solid track record of dividend raises, and each has provided investors with a triple-digit total returns over the past decade. These two companies stand to hold up through recessions because of their business models. So, safe stocks are in demand thanks to globally instability and the likelihood of rate hikes by the Federal Reserve. Nobody knows yet if a market crash is around the corner, but it makes sense to look ahead and find stocks that not only can survive the next crash, but thrive despite it. So, think blue chip stocks with a dividend that will reward investors if the market remains volatile. On top of that, you want companies and sectors that are a little more recession proof, such as healthcare and consumer staples, whereas where it is difficult that most people to cut back. So that's why pharmaceutical giant Pfizer, which I've talked about them numerous times, and food products maker McCormick and Company, MKC, stand out. So back to McCormick and Company, the flavor of money. Even if you don't own stock in McCormick, chances are you've helped the bottom line in buying one of their products. The Maryland-based company sells spices, seasoning. That's where I've seen them, on peppermint spice that I've used, seasoning mixes, condiments, and other food products. Right there, if that helps you out. Known familiar brands such as Frank's, Red Hot, French's, which is a mustard that I have, Old Bay, Lowry's, I think there's Lowry's Barbecue, and of course McCormick Spices. The stock is up more than 12% over the past year, though down more than 1% so far this year. Over the past 10 years, it has offered a total return of 352%, so can't go wrong with that one. So here's a look at what they've done. April of 17, 51, ran up to $74, took a dip there for whatever reason. Here's the lovely pandemic, so it still didn't even drop all that much. It was $83, dropped by $20, giving a nice buying opportunity. Then it shot back up to 101, so that might be something to look at. So market cap of $26 billion, days range 98.70 to 102, 52-week range 77.85 to 103, volume, not a whole lot of volume on it. Average volume of 1.6, almost 1.7. And the PE ratio. Last year was a banner one for the consumer staples company, bringing in a record of $6.3 billion in annual revenue, up 13% over 2021. Adjusted earnings per share rose 8% to $3.05. In the fourth quarter report, the company's annual guidance for 2022 predicted a 3 to 5% gain in revenue in 2022, with adjusted EPS between $3.17 and $3.22. Reason I like McCormick as a recession hedge is because people cook at home more with finances get tight, and that plays McCormick's strengths. So, very good point. On top of that, the company is a dividend aristocrat that has increased the quarterly dividend 36 consecutive times, including an 8% bump effective this year to 37 cents per share. This will give it a dividend yield of 1.46%, above the S&P's yield of 1.27%. So, not too bad. Next is Pfizer. I do have quite a bit of Pfizer. Actually, I don't know, I still hold it. I had it before the pandemic. I was looking for it to run up in regards to the vaccine and all that, but it really hasn't run up like I wanted it to. So Pfizer's well known for many consumers. I got into it for the just because it's huge and gives a dividend. I've had this since 2017, so way before the vaccine became, but their development of the vaccine. Stock, however, has been on a bit of a roller coaster, down more than 20% so far this year, but up more than 39% over the past 12 months. Over the past 10 years, the company has delivered a solid total return of 240%. Healthcare company recently reported full-year results. Revenue totaled $81.3 billion, up 95% over 2021. Adjusted diluted EPS came in at $4.42 per share, up 96% from a year ago. Now you might say that it's due to the success of the company's vaccine, committedly developed with BioNTech, as well as the antiviral pill Plaxivid. So here's a look what they've done over the last couple years. So 32 range back in 17. So they just don't increase, just steady, slow. As they would say, slow and steady wins the race. But I don't know if that's in this particular case. But here's the pandemic. So it was 39, so it still only lost about $10, which probably hurt for those of people that have a lot of it, but it does give a dividend, and then it hit the peak here. That's where I wish I would have dumped mine, and then it's came down since then. So market cap of $268 billion, days range 47 to 48, so a little bit over $1 in there. If you were trading it, 52-week range of 33.84 to 61.71, so quite a range there. And volume on this one, a little bit over 13.5 million, average volume of 35.5, and there's your PE at 12.16. Even leaving sales out from the 19 franchise, Pfizer revenue would still have grown, or still would have been $44.4 billion. Up 6%, realize to the camaraderie of the Plaxivid, will still be money makers this year, and it's easier to understand why the company expects 2022 full year revenue of $98 million to $102 billion, and adjusted diluted earnings per share $6.35 to $6.55. That would represent improvements of 23% and 43% respectively at the midpoint over 2021. Pfizer isn't a dividend aristocrat, interesting, but it has raised their payout for 11 consecutive years, including a recent bump of 2.6 to a quarterly of 40 cents per share, giving it a yield of 3.35. So you'll never find that in a bank. So I mean, that's not a lot, but it's better than nothing. So if you start out in your 20s or 30s and buy some Pfizer and set it up on drip and get that and dump all the dividends, that would add up over time. So just a thought. All the money the company is making helps fund its pipeline that includes 52 therapies in phase 2 or 3 trials. One of the most promising drugs that could launch this year is Sabinco, which has done well head-to-head versus Dupixent from Sanofi in treating atopic dermatitis. So to further increase its potential, the company also used the money last year for acquisitions, spending $6.7 million to buy Arena Pharmaceuticals, known for its inflammation therapies. This will complement Pfizer's JAK inhibitor. $721 million in 2021 sales. Pfizer is also adding to its oncology platform, $3.2 billion in 2021 sales. Currently led by Ibrance, 1.4 billion in 2021 sales by buying Trillium Therapeutics for 2.3 billion. So making the choice to recession-proof your portfolio. So if I were to add one to this, I would add, a lot of people don't like AT&T. I have shares of AT&T. When it was 22 something a week or two ago, I bought some more. I wish I would have bought even more because it's back up to 24. It's had a lot of volatility in it, and Verizon is another one that I would buy. It was in the 54 range as of yesterday. So of the two, McCormick has a more dependable dividend and balanced enough business to strive recessions. However, if you're looking for a more rewarding yield and greater potential for growth despite a recession, Pfizer appears to be the better choice. So, or you could just go with both of them. That's the way I usually do. And if you can't decide, just buy 5-10 shares of each and see which one performs best for you over the year and decide from there. So, particularly with a price to earnings PE ratio of 12 compared to 34 for McCormick. Plus, there's a strong chance that the pandemic eventually will become endemic, which means the need for Pfizer's booster shot or its antiviral pill Plaxivid will continue well into the future. So, and say what you want about that. I was over it a long time ago, so I'm sure a lot of you listening are as well. So, but should you invest $1,000 in Pfizer right now? So that is the question. I would wait and see if there's a dip, however, but that's beside the question. Definitely would have been time to sold there. Whether it runs up to that again or not is the question, but you can list in the comments which is your favorite out of these, McCormick or Pfizer. Again, if you're wanting the tickers, PFE or MKC, so I might have to look into MKC myself, but both are interesting. I already have Pfizer, so. And if there's any other stocks out there you want me to take a look at and do a video, I'd be happy to do that as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing. And hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.